Yeah, so one correction to the data, I mentioned yesterday that the CPI data is actually coming out, yesterday. It's actually today night, and a good morning from all the crows that you can hear in the background. And so basically, when it comes out tonight, the market's trying to judge whether it's going to be stickier. If I go by the market signals, probably it is going to be stickier. What are the market signals? You have the dollar index really losing its downward momentum. You have the bond yields also sort of bouncing back a bit from the lows. So if they are a short-term indicator, they may be indicating a slight pop there based on how the data really comes out. And so that might mean that yes, you're going to get stickier data. And why the market would be concerned about that is because if inflation is stickier, it means US has to keep rates higher for longer. It will not be able to cut very soon. And will that really result in a recession? Now, are you going to get a recession or not? So far, economic slowdown hasn't resulted in it, but a lot of people are forecasting that outcome based on how rates are poised and how they're going to be. And where that really shows up in terms of the hedge funds betting in that direction is the CFTC Commitment of Traders report. So the net speculative short position that is shown up in the report is now the highest in years. And all this happened in 1 week. So for several weeks, in fact, for 6 months almost since this short position showed up, it has been between 200 and 250,000 contracts. Never went past that. But in the last 1 week, we went from 230 to almost 310 or 320. So a big jump in a week itself. And that is now a record. So does that record mean you get a short covering rally? Or in the very short term, maybe they are right about the data. It's going to be stickier. So at least there's a case that markets could dip very, very short term. So that could be interesting. We're going to watch the short term in light of what can really develop medium to longer term. So short term, you can, see markets pull back from this jump up or rally that we've seen over the last month. We can get some retracement, but will it really be a recessionary outcome and the market takes a deeper dive is something that I think we can only judge later on, because I'm not so sure about the recessionary outcome, because it's a consensus trade. Everybody's short and everybody's talking about it online. And when everyone starts talking about something, then the odds of it playing out actually reduce based on just the consensus thinking. And so that will be tricky, but I will not rule it out. At the same time, be a little more watchful. But when it comes to the Nifty, we are hitting that key resistance between 17,700 and at 17,800. One is a breakout from the falling trend line, and the second is the previous swing high. That zone we really need to get past if we want to have a sustained rally further from here. Otherwise, in the very near term, if there is a global sell-off, there could be a retracement of the gains we've made so far. The last 2-3 days are showing some loss of momentum on the indices if you just look at the daily candles forming small little doji patterns. So that's what we're going to be watching out for in the next 2 days.